The 1-minute Forex chart moves fast. You watch a setup form, the candles flicker, and the price starts to whipsaw. If you're trading on pure price action alone, you are essentially driving blind at highway speeds. You know the exact frustration. A textbook breakout forms, you execute your entry perfectly, and the very next candle aggressively reverses, stopping you out for a loss. To understand why that happens, you have to look underneath the price. Volume provides the mandatory context that separates a legitimate institutional push from a temporary retail trap. The immediate objection here is that Forex is decentralized. There's no central exchange recording every dollar traded, making scalpers assume volume data is useless. This scorecard shows the market's mathematical reality. Studies confirm Forex tick volume has a 90% correlation with institutional liquidity. Tick volume counts the frequency of price changes, not total dollars. When frequency spikes, it maps almost perfectly to heavy smart money movement. Ignoring that data entirely leaves you exposed. Without it, you have zero visibility into the actual forces controlling the 1-minute chart. The most expensive lesson for a scalper is getting caught in what we call climax volume. This happens at the absolute peak of an extended trend. The chart prints a massive, explosive candle as latecomers rush into the market. Uneducated traders see that huge green spike and buy the top. They don't realize they're providing the exact exit liquidity large institutions need to reverse the market. To filter out those traps, we need the right tools. We're going to compare the top 4 volume indicators designed for ultra-short-term scalping. We aren't looking for a magic bullet. Every indicator has a specific strength and cost. Our goal is to weigh those trade-offs so you can make sharper decisions in real time. This comparison matrix maps out our options. First up in the grid is volume-weighted average price, or VWAP. VWAP works by anchoring the real-time price action directly to the cumulative volume data flowing across the chart. Because of that connection, it creates a highly accurate, dynamic level of intraday support and resistance. When the market is moving in a strong, clear, unidirectional trend, touching the VWAP line provides an incredibly reliable entry signal. But it has a major weakness. When volume dries up and the market traps itself in a tight sideways range, VWAP flatlines and generates continuous false signals. VWAP is a structural baseline. It tells you exactly where the market is grounded, but it completely fails at predicting sudden shifts in momentum. Next is on-balance volume, our divergence hunter. This chart shows a stark contrast between a rising price and a dropping indicator. OBV tracks the continuous flow of volume. It adds the day's volume when the price closes up and subtracts it when the price closes down. This running total exposes hidden market realities. You'll often see situations where the price pushes to a new high, but the total volume is actively shrinking. That specific divergence is your earliest warning. It means buying pressure is exhausted and an institutional reversal is imminent. The trade-off here is cognitive load. Utilizing OBV effectively requires an immense MEV line itself. You sacrifice the adrenaline of rapid-fire entries, but you instead gain a high-probability predictive signal for major reversals. Our third tool is Chaikin Money Flow, acting as the momentum filter. This oscillator moves around a strict zero-line axis. CMF works by measuring the balance of accumulation against distribution over a specific set time frame. Traders watch for crosses above positive 0.05 or below negative 0.05. Hitting those thresholds filters out the low momentum chop and confirms the actual strength of the trend. The cost of that clarity is speed. Because CMF averages data over a longer period, it generates a much smoother but much slower signal. If you rely on CMF, you have to accept entering trades later than you would with pure price action. It forces you to trade speed for safety. You miss the very beginning of the move, but it protects your capital by keeping you out of weak, directionless markets. Finally, we have the volume rate of change, the breakout radar. ReRock abandons smoothing completely. It does one thing: scan exclusively for sudden, rapid, and aggressive explosions in volume. The operational rule is simple. Scalpers use ReRock to hunt for volume spikes that exceed a 50% threshold compared to the recent moving average. When price violently breaks a level, a VRock spike instantly confirms whether that move has actual institutional backing, or if it's just a low-volume fakeout. But you pay for that immediate reaction time. On a 1-minute chart, ReRock is highly erratic and aggressively volatile. You cannot trade ReRock alone. It requires a mandatory secondary filter, like an RSI, to stop you from blindly buying into every single meaningless volume spike. It gives you the ultimate green light for aggressive breakout entries, but only if you harness it with strict rules for cross-confirmation. This decision tree flowchart maps these tools to your specific style. No single indicator works for every setup. If your main friction point is getting trapped by fakeouts when a range breaks, you deploy VWAP. Your execution rule is strict. Stay out until the volume prints 1.5 to 2 times the 20-period average. If you constantly bleed money by accidentally buying the exhausted tops of trends, you deploy OBV to hunt for those climax volume reversals. And if you prefer to ride established intraday waves, you use VWAP or CMF to confirm baseline momentum before you enter. Indicator selection isn't about hunting for a flawless tool, it's about diagnosing your exact weakness and neutralizing it. Whatever you decide, avoid the trap of indicator stacking. You must pick only one of these volume tools to place on your 1-minute chart. Layering multiple volume indicators will feed you conflicting data, overload your processing speed, and cause fatal analysis paralysis when you need to act. Picking the right filter is only half the equation. You still have to execute the trade. Reading the data correctly doesn't matter if your broker lags on execution or eats your profits with massive spreads. You need an institutional-grade platform built for speed. Open a demo or live NX1 account with FXNX. You get 0.0 pip spreads and ultra-fast execution to deploy strategies in real market conditions. Technical knowledge only turns into consistent profit when you trade on a platform built specifically for high-frequency precision. Start testing your edge today.